January 2, 1997. The Real Estate Capital Scoreboard January 1997. The year-end closed with mortgage rates jumping about 0.25% higher, a reversal of an overall declining rate trend that started in the middle of the year. Rates hover near the same levels available in October. Despite increasing rates, mortgage rate spreads are dropping as capital remains abundant. Lenders and borrowers alike remain busy well into the new year with refinancings and structuring acquisition debt. February 1, 1997. The Real Estate Capital Scoreboard February 1997. Generally speaking, 1997 is shaping out as a brisk year of activity based on the overflow of business from 1996. Hotels and office buildings are among the popular property types for those seeking attractive returns. Apartment buildings, net lease, credit properties and industrial are continuously sought, but acquisition competition is fierce. Capitalization rates start at 7% for apartment deals and 8.5% for other higher quality income properties. Overall yields remain in the 10% to 15% range based on risk-adjusted returns for properties with stabilized cash flow. Interest rates for 5-year permanent loans start at 7.125% for 5-year term funds and 7.5% for 10-year funds. March 1, 1997. The Real Estate Capital Scoreboard March 1997. Virtually no change in overall mortgage rates from the previous month. The declining interest rate trend evident since January is slightly reversed by recent Treasury rate spikes from the end of the month. Tighter mortgage spreads are compensating for rate volatility, indicating stable, lower overall interest rates. April 1, 1997. The Real Estate Capital Scoreboard April 1997. Interest rates are climbing, having surpassed their peak levels of May 1996. Overall interest rates start at 7.625% for 5-year terms and 7.75% for 10-year, fixed-rate loans. While rates have increased, attractive financing terms are still available to offset the impact of recent rate hikes as lenders remain awash with capital. May 1, 1997. The Real Estate Capital Scoreboard May 1997. Fixed-rate mortgages are priced about 0.1% higher than in April, starting at 7.75%. For 10-year deals, 8% is the new fixed-rate benchmark. Adjustable-rate mortgages appear more attractive than the current, volatile interest rate environment. Investors still seek apartment properties despite heavy competition. Steady cash flows and barriers to entry are among the many reasons for continued pursuit of this asset class. Most favorable capitalization rates start at 7%, as investors see inflation protection in most types of real estate assets. As has been the case for the past few years, abundant capital floods the real estate markets. June 1, 1997 The Real Estate Capital Scoreboard June, 1997. As the mid-year approaches, downward pressure on rates as overall pricing has dropped by more than 50 basis points during the past couple of months. Mortgage spreads over treasuries continue dropping by 20 to 30 basis points across the board during this month. 7.25% to 7.75% is the starting range for fixed-rate permanent loans. Mortgage spreads over treasuries start at 80 to 120 basis points for premium quality assets. Equity markets are highly competitive, although pricing dynamics remain the same as throughout most of this year. July 1, 1997 Real Estate Capital Scoreboard July, 1997. Dramatic changes in mortgage conduit pricing have ignited an extremely competitive realty capital environment. Interest rate drops combined with lower spreads create pricing opportunities that are nearly 0.5% lower than only 2 months ago. Short-term interest rates based on fixed-rate pricing start at 7.125% and 10-year funds start at 7.25%. Dramatic changes in mortgage conduit pricing have ignited an extremely competitive realty capital environment. August 1, 1997 The Real Estate Capital Scoreboard August, 1997. Interest rates have hit rock bottom based on combined treasury yields and spreads. This situation creates an advantageous environment for financing not seen for most of this decade. In fact, treasuries are at the lowest level since last November. Interest rates start at 6.75% for 5-year fixed-rate deals, 6.875% for 10-year deals. Newer, larger industrial portfolios are highly desirable for acquisition. Industrial buildings located in established industrial parks are the most coveted. Also, investors are gaining more confidence in office/service buildings. Capitalization rates remain unchanged from previous months. November 1, 1997 The Real Estate Capital Scoreboard November 1997. The mortgage yield curve is extremely tight, favoring longer-term debt. At costs are nearly equal to short-term maturities. Within the past month, interest rates reflected the highly volatile stock market by bouncing as much as 0.25% in a single day. The net result reflects rates settling approximately 1/8% lower than the beginning of October. Additionally, mortgage rate spreads are beginning to widen in response to an overabundant supply of mortgage-backed securities entering the marketplace in the past couple of months. Permanent mortgage rates start at 6.5% for 10-year terms, and shorter-term rates are higher by 10 basis points or more. An inverted yield curve. Equity yields remain unchanged, for the most part. For instance, 7% cap rates are common for multifamily and 8.5% for commercial properties.